Hi, my name is Zach. I am a life settlement broker, and I love helping people maximize the value of their life settlement. Now, life insurance is a great product that's really designed to cover the very small possibility of an early and unexpected death. But somewhere along the line, life insurance started getting sold as a great investment. And it is a great investment when the insured passes away relatively early, but most of us are going to live a fairly long life. So if you're well into your retirement years, you might be wondering, is this death benefit ever going to pay, and how many more premiums could I possibly make? You might even be wondering, do I still need the coverage anymore? A really interesting statistic is that an independent study found as many as 85% of universal life contracts never actually pay the death benefit. That means most of these policy owners get to a point where they either lapse the policy because they missed their premium, or they surrender it for their cash value. Now that other 15% that does get the death benefit, well, of course, some of those people are going to pass away earlier than expected. And the rest of them, well, they're going to hang on to that policy for dear life, making many payments year after year until death. It gets to be hard to walk away from these contracts when we've invested so much money into them. So why does this happen? Well, most people don't realize these contracts have an increasing cost of insurance the older you get. So when you're younger, you build up a cash value to help cover those future costs. And then when you get older, suddenly that cash value starts to go down rapidly because your insurance costs are going up. And when you don't have enough cash value in the policy to cover the difference, well, you get a much larger premium bill that you're used to paying. And people get to a point where they have to decide, am I going to let this entire thing go? Am I going to let it lapse? Or if they're lucky, maybe they have an opportunity to sell it. Now, we don't recommend waiting until this dire situation to try and sell your policy. And in fact, if you do have some cash value in the policy, that can help increase the value. So if you're thinking about getting life settlement offers, here's how it works. Investors are going to take a look at your health and try and get an idea of how many more years left you have to live. Then they look at the policy and how much it'll cost to cover those premiums during that time, and if the death benefit is large enough to cover those future premiums, plus the cost of the settlement and a reasonable interest rate for the investment to be worthy, they will make an offer. Now, we see offers as little as $10,000 all the way up to several $100,000 or even several million if the policy is large enough. Every case is unique. Now, if you saw a TV commercial and you're thinking about calling one company that buys policies and you think they're going to offer you top dollar without any competition, I would think again. In fact, most buyers in the marketplace don't have TV commercials and they don't have call centers. They rely on brokers like myself to bring them opportunities. Now, my job as a broker is to represent your best interests and get you the most exposure in the marketplace. When we have multiple bidders, then buyers will make offers and they'll keep increasing their offer until they don't want to pay anymore and we've reached the highest bidder. If you're happy with the bid at that point, we can move forward into closing. I can help you close the deal and get your money. Or you can decline, there's no obligation to accept. I would love to answer all of your questions and help you decide whether or not it makes sense to apply for offers. And the best way to get in touch is to fill out my free appraisal request form. I'd love to help you. I appreciate the opportunity, and I look forward to talking to you soon. Take care.